record this.
Right. Yeah.
Okay, so I'll put the recording in my YouTube channel if anybody wants to see it, and in place of Facebook. So go back to sharing the screen where we were, and so what we do with Crossfire, for anybody who's new, at 6 a.m. we look at four Forex pairs, being AUD, NZD, and GBP EUR. The reason for that is that there's a handover from the Asian market to the London market, which occurs. Well, the London market opens at 8 a.m. So there's a little bit of price manipulation to get price where they want it to be for the start of the London market, and we take advantage of that. You can also do Crossfire at the handover, or should I say the crossover, between London and New York, which occurs around about 1:30. And so we do four different pairs: European, GBP, USD, and Canadian dollar. And I also look at gold at that time as well. So if you're interested, we've got a workbook in the guide section in the Ninja Facebook group. There's also a few videos in there that you can watch just to find out what it's all about. So I'm going to get started. It's basically about putting two lines on the chart. What I do is I pick up that rectangle there, and I highlight the time period on the screen just to focus visually where we're looking. So that rectangle goes from 6 a.m. to 8 a.m. I've removed the border from the rectangle because I need to be able to see the wicks on this 6 o'clock candle. I'm going to move those out the way. And so basically I put two lines on there. I'm just going to place them roughly because we can't do anything until this 6 o'clock candle is finished. So we put a red line below the current price, and we put a green line above the current price. And I just changed that. And that's almost as much as we can do prior to 6:15. Now I'm going to just move you guys out of the way. There we go. The only other thing that you can do is just position these roughly, and for this I need to put the magnet tool on, and we just work as if this candle is already closed. It hasn't, it's still forming. But we look at the top of the 6 o'clock wick, and then we look left for the nearest higher high. So I've got my cursor on the top of that wick. I'm looking left, and the nearest higher high is that one there. And then I look at the bottom of the wick, and I look for the nearest lower low, which happens to be the next previous candle. So we've got those roughly in position. As I say, we don't do anything else until 6:15. So we've got 3 minutes left to go. I've already done this little setup on the other three pairs that we're interested in. So there's the Euro NZD. We've already moved out of the area that I was looking at. So we need to just put that over there, and we'll put that down there. As I say, these are very roughly positioned. We can't put them in place until this 6 o'clock candle closes. So I'm just going to go through the other couple of pairs. So that one's moved since I set this up. So we just go up there, and we'll move that one to there. And we need to move that one. That's going up there. That one there.
It all depends on the broker, Richard. It's amazing. Because I use FXCM as the MetaTrader 4, I obviously use their their feed.
Yeah.
Whereas you use the 8-cap, and there are differences. It's amazing.
Yeah, they'll all produce very slightly different numbers on your screen, and that's just down to how they capture the data. Might be a slight time lag as well, which is why it's always best to. I mean, the reason I'm using 8-cap is I use them as my broker anyway. So this matches my broker feed better than all the others. It's always best to go with a broker feed that matches your broker if it's available.
Yeah.
Right, so it's 6:14. So what we'll do in less than 1 minute's time, 35 seconds time, we'll get these lines in position accurately, and then we'll drop down to the 5-minute time frame. The other thing that we'll do is we'll put the Ninjacator on. I've got it ready set up, but I just find that picture sort of distracts me slightly for positioning the two lines. So I'll leave that hidden for the time being, and we're just waiting for. There we go. So there's a 6:15 candle just appeared. We now can position these lines. Now, looking at the top of that 6 o'clock wick, the next higher high to the left is that one. So we'll just drag that down. So we've now got 2 touches. Can you see what I did there? I've got a touch on that green candle there. I need a second touch on that top of that wick, and then the same here. The bottom of the 6 o'clock candle, that's the nearest door low. So I just need to get a second touch on the 6 o'clock candle. I'm just going to bring that in. Now, you need to cross the center of this candle. So looking from left to right, the center point of that candle, where the wick would be if there was a wick. And we just need to get that very slightly. There we go. That's actually gone through the middle of that candle there. So that's GBP NZD set up.
Peter, sorry, Richard. Again, we're talking about different feeds. To me, the next lower low candle is the one where you've got your red on. I'm on British pound, New Zealand dollar, not Aussie dollar, which is the next one to the 6 o'clock candle, and then the green one I've got is it's where the ninja down was, or it's just above that. It's the one to the left of that.
Up there.
Yeah, I look at the top of the wick, and the dotted line that moves with the or whatever it is, the line that moves. I sort of like put that on the top and look to the left.
Yeah.
And how accurate do you need to be?
It does. I mean, I find it doesn't really make that much difference. If I move that to the top of that, it makes very little difference.
Right. Okay.
And for this strategy, you don't need to be 100% accurate. It's really just a guide.
Okay.
I'll come back to that point when we actually get set up, when we start to get some action. So I'll go to GBP. So I've put that, looking across there, I can actually move that one there. Take that across the center. I mean, I often say it doesn't have to be 100% accurate. It just needs to be a rough guide. There we go. So that's 2 pairs set up. European, right. So that actually needs to be moved because that is slightly lower than that. So I'm going to put that on there. That's touching, that second touch is there, and we've got so that's got a second touch on there, and back to EUD. So the top of the 6 o'clock wick is there, so I just need to put that up there and then get a second touch. And so we're all set up on the 15-minute chart. We now drop down to the 5-minute chart, and we put on the Ninjacator, and then just go through these pairs. You can see on this first pair, we were in a Ninja up at 550. We're still in a Ninja up, and we've actually we're in this wedge prior to the crossover, so we're not interested in getting into either a buy or a sell. We want price to go either above the green line or below the red line. Now, just whilst we're on that, I'm also going to point out these moving averages and just briefly talk about those. You can see this purple line, that is actually my 800 moving average, which is exactly where price is at the minute. Now, that also coincides with my line. So that is going to be a pretty strong resistance line for price to break through. So if it's going to get through, it really needs to push really hard to get above that green line. And the second thing I notice about that is I've got a 200 moving average just above it. I'm going to turn off the magnet tool because it does interfere with what you try to do with the cursor. I'm just going to measure that distance between the 200 moving average and where the 800 moving average is, and there's 7 pips. So I think that if and when price moves above that green line, it's going to struggle to get past that line, and I would be waiting for price to get above that blue line before I thought about getting into a trade. If price moves down, what we'll need is a ninja down, and price to be below that red line. Now we will struggle to, well, we don't have any obvious targets for price. So what we need to do is look back for things like areas of imbalance, but we'll do that in a minute. We don't need to, well, we're not going to get into a trade right now. I'm just going to go through the other 3 pairs, and I'll address your query, Malcolm, about those 2 moving averages. So this is Euro New Zealand, very similar. We were in a Ninja up, which occurred at 435. We're still in a Ninja up. Price has gone up to the green line and bounced off it. Let me just see if there are any. Right, so we've now got the blue, which is a 200 moving average below the current price. So I'm sort of thinking we're going to get a ninja down, and price is going to head down towards that point. But we're in that wedge there. We're in the wedge before the crossover, so we're not interested in getting in a trade at the minute. GBP AUD, similar. It has popped its head above the green line. We're in a ninja up. It's popped its head above. It's just got above. Now that might be something to do with your different broker fees. That might just be that the green line is slightly out of position. It's not 100% accurate. May just be that other broker feeds have got a slightly higher green line. But either way, we're not interested because price is actually going down, and we're still in that wedge before the crossover. And GBP NZD, similar situation. Prices we got a ninja up on the 6 o'clock candle. It headed north, and it got as far as there's actually 3 reasons for price to move down at that point, because we've got our green line, which we've just put in place, but there's also those 200, there's a 200 and the 800 moving average, and all of that is providing quite a bit of resistance. So price is rejected from that, and again, it's still in between the green and the red. So
even though the PSARs are quite a distance from the wick, from the candles, aren't they?
that's right. Yeah. So we're not interested in those at the minute. So we've got time to just have a quick look at the really important thing. If I can get right, okay. So if I go to inputs on the Ninjacator and I scroll down and get the Ninjacator settings, you see we've got EMAs, and there's actually 5 you can put 5 moving averages on. I've got the EMA 1 as the 5 moving average. The EMA, the 2 that I'm focusing on right now is EMA 1, which is a 5, and then the trend change EMA, which is a 13. I'm going to go to the style, and you'll see that I've got the 5. The 5 EMA is the yellow line, and the trend change is the one that changes from red to green. So I'm going to temporarily remove the 2, 3, and 4, and just focus on those 2 now.
One quick question, Richard, while you're on that. When you do those settings, you then save them or save as the default, or?
Yeah, let me just click on that again. For some reason, I can't always get this set. There we go. So when I untick those, what I would do if I wanted to keep them permanently is I'll put them save as default.
Right. Okay.
But for now, I'm not wanting to keep them permanently because I want to revert back to the original settings.
Thank you.
Later. So we've now got 2 moving averages. We've got the yellow, which is a 5 moving average, and we've got this one is the one that changes from red to green. That's why we call it a trend change moving average. So that's the 13. That's the average of the previous 13 candles. That's the average of the previous 5 candles, and it's a really good indicator to let you know which direction price is going in. Now, the thing that I look for is the crossover. So you see at that point, the 5 move below the red, below the 13, and start to move away from it. Now, that's a good sign to me that we're in a sell. And then at this point, it crossed back over and it went above the 13 line, and we went into a buy. So that's the power of the 2 moving averages. Just as a little trick, if I can do it, if you hover on the yellow moving average, it's perhaps better to do it over here somewhere. See where I've got my little hand icon, where I'm hovering over the yellow average. If you right click on that and you look at visual order, you see this send to back, and then if I do it again, do it over here. If I right click on that, so visual order, if I bring to front, it actually brings the yellow above the candle so that you can see clearly where it is. You see there?
Yeah.
So that just helps you visually. If it was if you sent it to the back, it would be hidden behind the candle, which is not really helpful. So that is absolutely crucial to my strategy. I need to know whether the 5 moving average A is above the 13 moving average or below it, and B, is the gap actually widening? Because that's a strong sign that price is moving up or down, either moving up or moving down. So it's just a get used to the idea that you need to look at the widening gap. And as you can see there, price crossed over here at this point here, and has immediately started to widen, and it's still getting wider up there. So quite a strong move upwards. It's struggling because it's reached our green line, and that is acting as a point of resistance. I'm going to go back and put my other moving averages back on. So the orange line is my 50 moving average, the blue line is my 200 moving average, and the purple line is my 800 moving average. I'm just going to click save as default, and then it will always show those lines. Why isn't it on? Oh, there we go. Yeah. So there's the 50 moving average, and the 200 and 800 in this case are pretty close together, just above my green line. So as I say, that is a really strong resistance point. So I'm just going to go very quickly through the 4 pairs. Yeah, there again, you see we've got I think that's a purple, that's the 800 moving average. It's forming a resistance line. It's coinciding with our green line, so price is rejecting from it. Now bear in mind the news, there was no news until 7 a.m. this morning, so I've got a feeling we might be waiting for 7 a.m. before anything happens. We're still in between the two lines. This might give me an opportunity, because we've got half an hour before that news hits. This might give me an opportunity to show you what we've been testing out on the trailing Heikin-Ashi candles. I'm just going to, you see this situation here, prices come up to our green line and then it's rejected from it. It's wicked through it and then it's come back, and now it's having a second attempt or third attempt to break through it. It's going to need to really push hard to get above the green line. So we'll keep an eye on that. But as I say, I think 7 o'clock is going to be the time when we get some proper movement. And this is one of the GBP pairs, so that they're going to be the ones most affected. And in that scenario there, we've got 3 reasons why price is not going to go north. We've got our green line, we've got the blue 200 line, we've got the purple 800 line. So I'm just going to very briefly show you what we've been testing on using this indicator here, which you don't have this. Kevin sent this to me. There's a group of us actually testing it at the minute. I started testing it yesterday. I was really interested. So I'm going to show this indicator, and you can see what we've got here is some purple bars and some black bars. Those are what are known as the trailing Heikin-Ashis. Sorry, yeah, the smooth Heikin-Ashis. And there's a couple of other things on here, but I've been testing it on the 1 minute time frame. So these purple bars are indicating that price is in a downward trend. And then you see here, we changed to an upward trend. So at that point, they changed from purple to black. And I've got a couple of other things on here, which is, see this this large green candle. That is an engulfing candle. In other words, it's much bigger than the previous red candle. So it engulfed that red candle. I can see, and there's an engulfing. Excuse me.
Does it have to be the same, Richard? Does it have to be on that color pattern. In other words, if it's a green and the red engulfs it, then obviously the red is saying it's going down,
Yes.
and vice versa. If it was a red
Yeah.
on the left of where your little hand is, and the engulfing candle was a green,
Yeah.
then obviously it would be going up.
Yeah, we call that an engulfing bull because its price is rising. So that green candle has engulfed that previous red, but there's an engulfing bear, which means that the red candle engulfed the previous green. But they don't get too hung up on that at the moment. We've got another indicator here, which is CCU, which is color change up. So that's indicating we were going down, we've changed direction, we're now going up. Now the importance of this, if I can just briefly tell you how I used it yesterday. You see how back here we got a color change up at that point, and then it changed to down. That's actually, it's a bit too condensed. We'll maybe change that, but this is the color change down. So at that point it changed from up to down, and then there was a real strong well, we'll call them purple candles, real strong purple candles right up to this point. Now if you look at those smooth candles and compare them to the normal candles here, we've got ups and downs going on. Now, if you got into a sell at this point, you might be tempted to get out at this point when price starts to go up. But what this smooth candle is doing is saying, no, stay in, because the trend is continuing down. There's a number of factors built into this candle, and it's basically saying you're safe to stay in because we're still in a downward movement. So if you got in at that point, under normal circumstances, you might have got out at that point when the color changed. But this purple candle is helping me to stay in. So not only do I stay in until price starts to move up here, but I stay in even longer and price ends up moving right down to there. But you know, just in rough terms, instead of getting in, say there, and getting out there and taking 7 pips, I'm staying in until price comes down to this point here, and just move that along this point here, and we're looking at 25.9 pips. So that made a huge difference to my trading. I was trading, just testing it on demo, but I was staying in until this color changed, and it was massively increasing my pippage. You know, another example here, we got a ninja up, we got a color change 1 candle later. We just had a bear up, I think. No, in that case there wasn't a bear up, so maybe I wouldn't have taken that, I don't know. But either way, if I'd got in, I would have got in somewhere around here. I would have probably got out at that point, but because these candles have remained black, I can stay in and follow it right up to there. And I would think about getting out when we had a color change. So it's proven to be really powerful.
Is the color change, Richard? Obviously, the CCU or whatever it is you call it, CCU. Is that a bit like the ninja up and the ninja down? In other words, you wait for the candle until it actually closes.
Well,
it doesn't disappear.
No, the way that I use this, I've just realised I'm on the 5 minute. I should have been on the 1 minute, but I mean it's exactly the same effect. The reason we've got this colour change up and colour change down is to allow us to put an alert on it. So what I can do is, if I right click there and put add an alert, there we go. So what I can do is I can put an alert on, where are we?
You have to be on an indicator, don't you?
No, I put it on this one, TV trailing, which is the name of the indicator. So I put it on TV trailing, and then look at what is, I mean, this is still in development stage, so it's a bit,
Right.
but what I can do is I can say, right, alert me when it changes from being in a downward trend to an upward trend, and also I can put another alert on for when it goes from an upward trend to a downward trend. And it'll actually tell, because I've got that CCU indicator on, it'll tell me when it's actually changed. So in other words, it just saves me sitting watching the screen. So I was testing this on just one pair yesterday. I was on EUR AUD. I've got an alert on, and it would bring me back to the screen when this situation changed. I'll put it on the 1 minute, and you can see. So you can see we got a color change here. We got a bull candle immediately after it, and we had a ninja up immediately before it. So that's an ideal situation. We've got a ninja up, we've got a color change, and we've got a bull. We've got a bull engulfing candle. So that's telling me we're in an upward trend. So if I got in at that point, instead of getting out on that red candle or any of those red candles, I would stay in, because this is telling me stay where you are. There was a little bit of a wobble there where we had a color change down. So I might have got out at that point. If I'd stayed in, I've got even more pips coming on here. Now we're on the 1 minute, so we're looking at different values, if you like. So it went up to about that point, but it started down there. So that was 14 pips, and that was in minutes. How many minutes was that?
Morning, Richard.
Morning.
Is everyone testing this on the 1 minute? Is that the general thought?
People have been testing it on the 1 minute, yeah. Although everybody's, I think the idea was that we would all try something different about it.
Looking at others as well. Okay.
So, I mean, as I say, it's still in development stage, but what I found in my testing yesterday was really, really useful. Instead of getting out when price appeared to reverse, I was trusting this indicator here, this black candle or the purple candle in the opposite direction. I was literally saying, I'm not going to get out until that color changes. And I was definitely staying in way longer than I would have done without this indicator. So it's looking really promising. Kevin's got to do a bit more work on it. He messaged me yesterday and said, look, I literally threw this together in 5 minutes. And basically it's a combination of a number of existing indicators, but in my experience yesterday, it's really working extremely well.
This business of staying in, Richard, right, without not that, but you really have to steel yourself, and you know, because I sort of sat there and watched it, and it's gone sort of like +1, and then it starts to go minus, 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 and then the next thing is, you know, you're on -10, -11.
Yeah.
And you're thinking, do I get out, and these sort of things. But it's a big mind, it's a big attitude mindset.
It's also about money management, because yesterday the one thing I wasn't sure of was, well, how many pips drawdown do I tolerate? So as an example, I was on Euro Aussie dollar, and I was saying, if it goes to, because I'm on the 1 minute time frame, let me say I'm going to set a stop loss at 5 pips, and I'm going to go for a take profit of 10 pips. So I've got a risk to reward of 1 to 2, and I also tried 15 pips. So I was on 5 minute drawdown, sorry, 5 pip drawdown as against a 15 pip take profit. So I could afford to lose a few trades and still be in a winning position, because my risk to reward was more than 1 to 1. 1 to 2, I mean, I think I did 15 trades, and if they were all 10, if they were all 10 pips as opposed to 5 pip drawdown, that would have meant I got, let's say I won 8 out of the 15, that's 8 times 10, that's 80 pips a gain, as opposed to 7 times 5, which is 35, I lose. So I'm still well in profit. So anyway,
Is there any, Richard, is there anywhere that you can go, or is there a video do you happen to know about this thing? Because I don't quite understand all this business of risk.
no, it's still in testing stage. I think we're going to be launching it pretty soon.
I wasn't talking about this new thing. I'm talking about generally, if you were just using, for example, the Ninjacator and
Right.
The Ninja trading system, which I've been
Right.
using. Well, I mean, this business of risk to reward and the bear and the long position and the short position, and you know, I'm thinking FTMO along, you know, along those lines.
Yeah. Okay.
That I need to, and I understand that you're not allowed to lose more than so much, and it would be nice to be able to sort of say, well, how the hell do I measure that? I've heard it banded around, and it's you know, I'm only 6 months in and still learning every single day, but and there's more and more coming up.
I don't think there's.
No, I'm not sure there is, Richard.
It might be worth one of us doing a one-off session just to do the basics.
It would be really, really helpful, that.
Okay, I'll talk to Paul and see if he wants to do it, and if not, I can do a one-off session if people think it'll be useful.
I know how to use the long position and the short position. They're things that I've got on my favorites, but when you click it, and where do you put it, and how do you read it, and you know, all sorts of things.
Well, you put it on your entry point, and then whatever your stop loss is, whether it's if the trend's changing, it'll be on the lowest candle after the trend changed.
So the trend change, David, would be, for example, the stop loss might be on this British pound Aussie dollar on the 15-minute chart at the moment I'm looking at, would be just above the PSAR. Yeah.
In this case, yeah. So your entry point would be after the Ninja candle closed,
right?
And your stop would be on the bottom of the PSAR, and then the information on that panel will tell you what the ratio is.
Right, and that ratio you read as.
Yeah. So if it says in the middle panel where it crosses from red to blue, it'll say 5, so that'll be 1 to 5. So you're risking. You'd have to know what your position size is to start with, but
yeah, these are the more.
It's just a visual thing that you're kind of used to, or.
Yeah, I know, but when you've been doing it for a long time, and you know, you want to learn the right thing, rather than sort of, you know, cobbling it and saying, okay, well, we'll do that, and then, oh no, you should really look at this, or you should look at that, and yeah, I mean, I don't want to hog it, or you know, but it's something that.
That's definitely a good question.
I'll have a word with Paul and see if he wants to do a risk to reward session, and if and just find out if he wants, you know, if he wants to do it or if he wants someone else to do it.
Because it all comes down to, you know, I mean, the whole idea is to get a funded account, and one of the main things that I see, whether I'm right or wrong, is that, you know, you can only lose so much, and therefore your risk to reward has got to be in proportion to a situation where you don't blow it. That's
right. Yeah. No, it's a real valid point. And if there isn't something in the guides, then there probably needs to be. So I'll speak to Paul and get him to let me know whether he wants to do it, or whether he wants me or David or whoever to do it. So I'll come back to you on that, Malcolm.
Okay, thank you.
Right, so we've sort of moved away from the charts. We just need to sort of look at the situation again. That's my gold. Okay, so on euro Aussie dollar, price moved out, and this often happens. If you're on these sessions regularly, you'll notice that price was in a ninja up from just before 6 o'clock, and it was heading up, and it popped its head above the green line, and it went, it looked as if it was heading north, and then it immediately turned back down again, and we're actually back in the opposite situation to what we might have thought we were going to be in. And this is my ideal situation. We were in a ninja up prior to 6. It teased us into thinking it was going north, but then it's reversed. So we've now got a ninja down, and price is actually poking its head below the red line. So this is the real move, in my opinion.
Whereas that moving average, that 5 moving average, is crossing over
Exactly.
the trend change.
Exactly. You can just see there, it's just moved over the trend change line. So we're now looking like we might be going for a buy. So we're now looking like we might be going for a sell, whereas previously you might have been tempted to get into a buy at that point. So I would have resisted that temptation, because I know this happens day after day after day, and you can get caught out. So here we're looking now at trend. The trend change from green to red. The yellow 5 moving average has actually dipped down and has crossed over, and we're now just sticking our head below that red line. Now, I wouldn't get in at this stage. Well, I wouldn't have got in at that stage. I would have waited for this candle to come in, and I would be looking for a red candle and price going down. It's actually reversing at the minute, which is why I stay out until the next candle. So I'm still thinking it might go down, but it's just playing around at the minute. I'm going to keep an eye on that. What I'm looking for is a candle to open below the red line and start to make a strong move downwards. What I need to do is think about where is it going to go. My 200 moving average is up there, the 800 moving average is there, and the 50 moving average is there. So the moving averages are not helping me in that case. What I need to do is look for an alternative target if it goes down. So I'm just getting ready for what might occur. Now you can see here we've got some imbalance. This is only at 5:10 this morning, but there was from the bottom of the body of that candle up to the bottom of that wick, that was all imbalance. So there's a potential target for price to pop down there and take out that imbalance. But then if you look even further back, we're looking for something else below that line. Now, here we've got we need to zoom in to see it accurately. And so current price is where that green line is there. And can you see how much imbalance is going to be? There's a chunk there, there's another chunk there, there's another chunk here. So without going into fine detail, what that's telling me is there's an awful lot of imbalance. And this is going back to 17th of August. But all that imbalance there has to be taken out at some point. Now, I could spend the next 10 minutes marking up these sections of imbalance, but I'm not going to. I'm purely saying this is where price is now. It has several reasons to go back to this point, to these points here. So when price starts to move down, if it moves down, I've got to be conscious of that. But my initial target would be that imbalance there. Let me just reset that chart. So there's an area of imbalance. We'll mark that one off just as an example. So I'm going to take it from the bottom of that wick there, which coincides with another one. So there's an area of imbalance. I'm going to change the color of that. So there's a potential target if price does make its way past this red line. I would set my target at the top of that imbalance to be on the safe side, but price could come down and reject from that top, or it could come down and take it all out, all in one go. We don't know, but there's from where price is now to the top of that imbalance. It looks a lot more, but it's not even 7 pips. So you might think about going for 5 pips. Let's just have a look. So the 5 minute stochastic is heading down. The 15 minute stochastic is sort of leveled off, it's plateaued. If we look at the 15-minute chart, you can see that the 15-minute stochastic is actually heading upwards. So there's contradiction there. So basically, we just have to wait and see what this candle is going to do. It's popped its head below, but it hasn't quite made it. We'll just go through the other pairs. Same there on the other euro pair. Price has come down below. We've got a ninja down. Quite a lot of indecision there. Can you see how there's a long wick above and there's a long wick below, and the body of the candle is quite small. That's what we call a doji candle. Indecision, and for the minute it's heading its way back up. But in this case, we've got a couple of potential targets. You've got a 50 moving average, 200 moving average. Let's have a look, see if we can find the 800. There's the 800. So this one's looking a bit more promising to get down to the moving averages as targets. That's the Euro New Zealand. Although the Euro New Zealand and the Euro Australian dollar do tend to mimic each other because of the closeness of the currencies. So this one's still thinking about it. A couple of really long wicks there. We'll look at the British pairs. These are acting differently. We're still in an upward trend. You can see the green line is still green, as opposed to, it was red, it's gone to green. The 5 moving average is above the 13, sorry. A lot of indecision. It's gone above the green line, and it looks like it might just be teasing us. So nothing really. I would want. We were in a ninja up before 6. We're still in the ninja up. I still regard that as indecision, consolidation, whatever you want to call it. And GBP, Aussie dollar, there we go. Sorry, GBP, New Zealand dollar, pretty much the same. And we're basically, I think, just waiting for the 7 o'clock candle. So I'll stay on till see what happens at 7. We've got 3 minutes. So just over 2 minutes for the news to hit. You see where we are here with all the 2 the 800 and 200 moving averages are still clinging to where we put our green line. So it's a strong support resistance point.
If that changed to a ninja down, Richard, and started heading, you know, the PSARs flipped and that would that be a good signal?
Yes, I mean, in my mind, I think the price, because it went up at the beginning of this session and it poked its head out above, it's given me the impression that it might be wanting to actually go down longer term. But I think the big players are sort of sitting on the hands until the 7 o'clock news, and then they'll use the news as a disguise for their manipulation.
Right.
So my policy would be don't get in a trade now, because the price could fly upwards and then back down, or down and then back up again within a heartbeat, and I don't want to be caught in that drama. I want to see which direction they do actually intend price to go. So I would stay out sort of from a couple of minutes to 7 to at least a couple of minutes after 7, just to see what plays out. It's dangerous to be in a trade at 7 o'clock when you know that there's some it looks like red flag news. Just have a look at Forex Factory. Well, on there it was just orange flag news, but I believe it was red flag. Yeah, 10 seconds. You see all these red flag items. So I'm going to go back to, and we'll just sit and watch it, which is my attitude whenever there we've got a ninja down. But did you see it fly up?
Wow.
We got a ninja down, and then it completely reversed and went upwards, and who knows. Now, you could have got quite a few pips if you've been in a buy, but there again, it might have reversed.
Only 14.
14 pips, was it?
Yeah.
Yeah. I deliberately stay out of trades at that point. And in fact, if you're doing a funded account, they won't allow you to take a trade. FTMO won't allow you to take a trade when there's red flag news.
The PSAR just popped at the top of that candle on the 5-minute on my feed anyway.
Yeah. Well, I mean, it's absolute indecision, isn't it? You know, it's gone up, it's wicked sort of to double the length of that candle, sorry, double the length of the body, and it's now hovering about. But you know, we're just 1 minute into this candle. It's got plenty of time to come right back down here and then right back up there again. This is the big market players manipulating the price, and they're having a bit of a bun fight at the minute. Buyers and sellers are trying to win the battle, and basically I just say, I'm not going to risk my money. You'll see we're on Great British Pound New Zealand. If we go to Euro New Zealand, you see there wasn't that much. Because this is the euro, it's not affected by the GBP news. It does sometimes occur, but I was pretty sure that the British pound would be affected. Have a look at the 1 minute chart. See that all of that movement happened in one 1 minute candle. Massive move from top to bottom, but then it starts to settle down. But as I say, I would not be in that trade under any circumstances.
I suppose the big boys would be loving that. They'd be throwing bucketfuls at it.
Well, I mean, that move up there took out any stop losses. Anybody thinking that this was going to move downwards which if you look at that trend there, there's a lot more red candle. We're in a ninja down, we've got more red candles. So they're playing on the fact that some people would have already placed sell orders and put the stop loss up here, perhaps above that higher high. So they've taken out those stop losses. There's nothing to stop them coming down here again and taking out stop losses from people who thought it was going to go up. It's just, to me, it's just a dangerous situation to be in. And if you, particularly if you're going for an FTMO account, they don't allow you to either enter or exit a trade 2 minutes before to 2 minutes after red flag news.
Really? Thank you.
When you're looking at FTMO, it'll actually flag that up really seriously. They just do not allow trades 2 minutes before, 2 minutes after. I'm not sure about my FX funds. I think it's the same. But anyway, we'll go back to the 5 minute chart. So 5 minutes, they've certainly taken out the stop loss, haven't they? If you're setting it, if you're getting in for a sell, you'd have a stop loss above that wick there, and you would have been wiped out.
They need your money.
Well, yeah, they play with us, don't they? You know, if you're going to leave money on the table up there, we're going to take it.
Mm.
So euro hasn't been affected quite as much, but there was still a bit of a move at 7. That's a 7 o'clock 5 minute candle. It was coming down. It's gone up. You see where it went to? It wicked almost to the.
The 800.
Is that the 800 or 200? I can't. I've got sun. The sun is coming around. Yeah, it's the 800. The sun's coming around into my window and it's interfering with my vision. Anyway, so there was a, you know, might just be a coincidence. EU NZD. See how that wicked up and down, wicked out to take some stop losses out there and wicked down to take stop losses out there. And there wasn't any Euro news or New Zealand news, was there? GBP AUD. So once this news settled down, we might actually get some proper action. That's still in that's looking very much like consolidation, isn't it? With a wick up there to take out your stop losses. Who knows? Depends where they want to put the price, but it's not. They're not. Basic. My philosophy is I don't try and predict where the price is going up or down. I wait until they show their hand, and at the minute they're not really showing any decisions yet. So I'm quite happy to sit and wait.
And it's sat inside sort of no man's land as well, isn't it?
Yeah, although this wedge here between the green and the red after the crossover is not as important. I wouldn't get into the trade in this prior to that crossover, but I will consider a trade after the crossover, providing there's enough room for movement for profit. And I'll explain that. Let me just move that down. If I was, we're in this wedge between the red line and the green line now, and previously we used to be very wary of that. But through my back testing, I've discovered that you can get into you could get into a buy because you're between the green and the red. But what you have to be cautious of is the gap between them. So if you're going to get into a buy, you'd have to decide what's the gap. So if you're going from that green line up to the red line, there's a gap of 16 pips, so that's reasonable. What I would say is if the gap was tighter than that, I wouldn't be interested in getting in for a buy, because purely because that red line is a strong resistance point. And price might start to go up, but it'll definitely hesitate when it gets to that point there. It might bounce off it or it might break through it, but it'll certainly hesitate. So that's my view of the trades, taking trades in the wedge after the crossover. I'm reasonably confident that I can take a buy, but only up until that point. However, I'm not going to do that because we're on a red candle up. It's looking like it might be turning down. We've got the yellow is just touching the, is it red? Yeah, the yellow and the red are just touching. I would wait for a crossover.
The yellow on my 5-minute chart with the other two moving averages, the blue and the purple, but it's all clustered up. They're all having in Paul's words, a kiss and a cuddle.
Yeah, yeah. Which is, yeah, they're there. They're actually basically clinging to this green line that we put on. So that's a dangerous. Well, it's not dangerous. It's just a warning. Don't get in until you get some movement. But all 5 moving averages are pretty close, aren't they? The 50 is slightly below, but everything else is bunched up. So yeah, again, stay out. Don't get involved. Let's have a look here. What have we got? Yeah, British pound, Aussie dollars starting to make a move. The 5 has moved below the 13. We've got a ninja down. We're below the green line. We're definitely below the red line. PSAR's above. So here's a potential trade. Where would we use as our target? I mean, the safest, if you were getting into a trade now, your safest stop loss would be above the PSAR. You might consider the red line as a strong resistance point, as another stop loss. And if you're really confident, you might consider the green line as a stop loss. We're less than 1 minute into this candle though, so maybe just wait until you get a bit more confirmation. There's a 200 above, so we need to consider potential targets. There's a bit of imbalance down here, not much. That was all sells, wasn't it? So we're going back quite a ways. Yeah, but here's another cluster. So this red line is where price is now. Below it, we've got some imbalance to be taken out down here. We just zoom in, just try and get a clearer picture. No, that's all. Yeah, that was all buys, so we might have to take that out. So there's a potential. Reset that, get back to where we were. There we go. So this might be coming down to take out imbalance here and back a few days. Yeah. So on the 5-minute stochastic, it's heading down. It's just gone below the 40% mark, so it's got some way to go. I can't quite see the 15. Yeah, on the 15, it's sort of leveled out, plateaued. On the 15-minute, the PSARs are still underneath. Go down to the 3-minute. It's 3 minutes moving down pretty strong. potential sell there. Okay, so I'm just going to do a quick review of all the pairs and then call this session a day. Right, so that one's actually we took our eye off that one, didn't we? Look where it went. It's come down to the top of that imbalance that I marked off before, and it's bounced off it. However, it all happened in that one candle. So if you were waiting for a ninja down, you wouldn't have got into that in time. But just out of interest, just measure. Yeah, it was only. I seem to remember we were looking at 5 to 7 pips out of that. So not spectacular, but it went where I said it was going to go, or where I said it might go, I should say. Not the same with Euro New Zealand. If that's going to come down, it's got a good target here. And where price is now, that's 9.5, 14. So you need to keep an eye on that. If that continues down, the stochastics are not brilliant.
There's only a few seconds left.
So yeah, the 5 minute stochastic is sort of in the middle there. It might be going down. Just a bit of indecision there. So we just need to wait for it's bouncing off the 50 moving average, and there may not be sufficient room between that position there and that one there. No, there's only 5. But not of great interest. So GBP AUD. It's gone down, taken out a little bit of this imbalance here, but there's a bit more to go. So that could be going down. And the last one. Yeah, see this imbalance? There's a bit of imbalance there, there's imbalance here. So it's broken away from this cluster of moving averages. It's gone through the 50 moving average, and I suspect it's probably going to come down here and take out this imbalance. Right, okay, so it's 7:15. Unless there are any questions, I'm going to close out the session, and thanks for jumping on. I'll have a word with Paul and see if he wants to do a risk to reward session.
Thank you again, Richard, for a very enlightening hour and a bit.
Not a problem at all. Glad you got something out of it. Or there's something in chat. I just need to have a look. Okay, so you're welcome, Mike. No problem. So thanks for jumping on. That's me done for today. John McLaughlin's on at 1 p.m. Doing Crossfire and Gold. I believe Brian's on at 8:30 this evening, and then we're back to. I'm not sure. Does Brian still do a Saturday session?
No, he'll be next on Sunday night.
On Sunday, okay. And then we're back to Paul on Monday. So thanks for jumping on. I'll see you next time. Cheers.
Thanks,
Now.
Richard.
Cheers, Rich. Thank you.
Thanks a lot.
Cheers, Richard.
Thanks, Richard.
Bye.